Good morning, all. So this is regarding US oil, which is a crude oil. So let's see what's happening in the crude oil. I'll give one brief overview because it's been a very long time since I've covered up a crude oil. So crude oil on a weekly time frame. So it was in a double bottom pattern, and then it was like roughly 68 weeks of for six for 76 days. So roughly more than one year 1 quarter. So it was in a double bottom, and then now, as I said, this is a lower low. This low has broke here 82.60 in a weekly time frame. So the market is in a bull run. Now we have one weekly resistance here. After this bull run, the market went here. So this was a resistance. The market took a bounce from there, and then again the market from here it's moving on. So the next resistance would be straight up top here. Should be 123, 124. So let's see this one. So the area of interest should be here. Okay, so now we have got what is the weekly time frame. So weekly we have low, after this we have a higher high, and this is a higher low. Okay, so if you have a look at this here again, you can see this is low high and higher low. Or if we consider a trend as a whole, so this should be your higher high and this is your higher low. So either way, this right now we are at higher lows. Fine. So let's see at this area what happens in the lower time frame. Fine. So I have considered this from low, high, and higher. This is one swing here. For that swing, I have drawn a target. This dashed red line. So that is coinciding with this one. Give me a minute. Okay. Fine. So now let us see how the thing is. This is weekly. So let's go up in daily. So in daily, if you have a look, so this is a higher high, and then the market started trend down, lower low, and again here double bottom, and then neckline has broke in the last Friday's candle. One strong candle was there on the last Friday. So this one, this is the for the weekly. This is the impulse wave, and this is a corrective wave. So this corrective wave, maybe for I'll draw the line here. If you see here, this is the impulse wave, and this corrective wave in weekly it is a correction, and that correction in the lower time frame will look like a downtrend. So that is how we got a downtrend here. Again here the pattern has changed. Here from the down the trend has turned to up. The double bottom neckline has broke up. Now from here the market is expected to take another impulse wave, and for this swing, so that impulse will start here, and that impulse will continue up to the dashed red lines here. So that is the swing targets. So I will draw the swing now. It's low, high, higher low, higher high. So this is how it is. Fine. The risk reward ratio is 1 is to 2.19. So this is a pretty decent. In any trade that is above 1 is to 2 is a good trade actually. Fine. So here if we have a look here, so here we have a resistance here. Let me draw it for you. Here we do have one resistance here. So this resistance has already been bounced back, and then the market is going here. Once if this resistance breaks, the next stop would be this one, which is 123.48 to 120.32. So this would be the range. So roughly 120 to 123 is the next target after this one. Okay, so for this swing the target would be 100.69, and your stop would be 81.56. Weekly candle closes below 81.56, that is the stop. And if the target, if a candle hits the target, that is 100.69, that will be the target. So which is a 1 is to 2.19, the risk reward ratio. So this is a good trend. And now right now I want to tell other thing is anything for the lower time frame is, so as I already marked here, the weekly is the resistance here. Let's look at 4 hour time frame. Yeah, because in a daily time frame, I have said that this will be a double bottom neckline break, and the pattern's target. So double bottom neckline break, right? So this pattern's target would be here. Let me copy this, and this target. If we have a look, and this target is very closer to this weekly's resistance or the high of this particular swing, which is give or take 7%. Sorry, $5.89. Okay, so this swing will be very how do I say, so that lower time frames, anybody who wanted to trade in a lower time frame, not in the weekly, very bigger swing, lower time frame, so they can consider this one resistance, very strong resistance, that is 93.73 to 93.15. This is one strong resistance, your weekly resistance. Within this, from the current market price, we do have $5.89 of area. Here within this, the market is, it is very evident that the market will reach 93. So the market is in bull in daily. Okay, bull in daily and lower time frame. Again, you can consider this as the target, and anything that goes here within this area, marked here, anything that is within this one. Give me a second, let me delete this one. Okay, anything within the circled one, from the current market price to this weekly resistance marked here, which is 93.73 to 93.13. Here you can look for the further, because there is no candles here, allow the candle to grow up. So either once the candle starts growing up, then we can figure out if there is any trend or pattern formation, and then within this point we can do a more of smaller trades within the lower time frames, and then we can uh, you know keep our account trade. But the one thing is, here the market is considered as daily as a bull. So lower time frames, apart from intraday and scalping, any swing trades above like 30 minutes or 1 hour time frame, so be in bullish mode, because since daily is bullish, the lower time frame, the swing trades like from 30 minutes or 1 hour, so the impulse will be much faster. So beat in a bull, so that the target hit will be much faster. Okay, the possible thing that market can move right now is, because it's double bottom neckline break, it is after the double top neckline break, either it can straight away move up, or it can go for a correction and then form this as a swing. So low high and higher low, and then the market can go up like this. So these are the possible ways. Okay, so for aggressive traders, they have an opportunity right now. They can hope till here the target to go. But for a conservative traders, you got to wait for the market to do a correction. If market doesn't go for a correction, then conservative traders won't get an entry. Aggressive traders entering now will have the shorter profit area, but will enter the trade. So these are the two different changes that will have it in both aggressive and conservative traders. So depending upon your trading style, you can choose it. However, so in nutshell, what I want to tell is, in case if it comes for a correction here, assuming, then the market is going up here. So let me mark here. So this is the low for this swing which I'm drawing. So your risk reward ratio would be, so risk would be $3, $3.62, and profit will be $8.26. So the risk reward ratio is 1 is to 2.29. Assuming the market is straight away moving from here, aggressive. When you're aggressive trader, your risk will be higher, $5.95, which is almost 1 is to 1 risk reward ratio. So this is the difference of aggressive and conservative traders. Fine. Anything that happens within this, let us allow to cook the candles there, so that we can able to figure out trend or pattern in them. So crude oil, be bullish. So overall, the crude oil is in bullish in a weekly time frame. The long term target will be $123, but whereas a short term target would be $100, and even more shorter target would be your 80, sorry, not 80, $93, $93.73. Fine, so we do have these $3. So any short time traders, target for 93. For a mediocre time frame, target for 100. For long term, trade it for 123. Anything within this, always the trend is bullish, so be bullish most of the time, except the intradays and scalpers. So this is the view on my USD INR, crude oil. For any further trend changes, anything is there, I'll post it up in my comment section. Actually, right now the trend has broke. Actually, for the weekly swing, the daily has given a trend reversal, and this is right now it's a buy signal. Fine. Happy trading. Over and out.